Could you really build a bank, like, from the ground up in just a few weeks using AI? Sounds a bit like science fiction, doesn't it? But the reality of AI and fintech, well, it's moving incredibly fast. It's shaping finance in ways you might not even see coming. Welcome to the Deep Dive. We plunge into the most critical insights from stacks of research, turning all that complex info into clear, actionable knowledge. Today, we're really digging into artificial intelligence and financial technology. And we're drawing heavily from a fascinating source, the recent Atlanta Roundtable, and its pretty comprehensive white paper.
Yeah, and our mission here really is to cut through the noise. You hear so much about AI, right? So much hype. What we want to do in this deep dive is unpack the actual applications, the real world challenges, and where AI in financial services is genuinely heading. Find those nuggets of insight that really matter.
Exactly. Think of this deep dive as your shortcut. We want you to understand where AI is truly making a difference, where it's delivering actual value, and maybe most importantly, where human judgment, well, it's still absolutely crucial. So yeah, prepare to get well informed. Okay, let's dive right in then. The white paper kicks off by really focusing on Atlanta Transaction Alley, as they call it. It's this huge fintech hub, processing, over 70% of all U.S. payments? That's massive. Yeah. What is it about that region? What makes it so ripe for AI adoption?
It is. It's a really fascinating mix down there. You've got this ecosystem where these long-established financial institutions are right alongside these incredibly nimble, innovative startups, and that just creates this sort of natural breeding ground for AI, especially in things like payment processing, obviously fraud detection, transaction analysis. One person at the roundtable actually said they're seeing widespread use of AI in payment for fraud detection, and then obviously in any kind of underwriting, machine learning, predictive analytics. Yeah. I mean, the sheer volume of data there gives AI so much to work with, right?
That makes total sense. All that transaction data, yeah, the patterns must be huge for AI to learn from. But are they all doing it the same way, the big guys and the startups? The white paper seems to suggest some, pretty big differences in approach.
Oh, not at all. There's a clear split, really. You could almost call it an innovation tax for the bigger players. Your traditional banks, they're really wrestling with these legacy system integration challenges. Decades of old tech, it just slows things down.
Yeah.
But then you look at the AI native startups coming out of Atlanta, they have a completely different mindset, building everything fresh, no historical baggage, like one participant put it. The cost to launch something has gotten so low that if you have deep expertise in something, you're able to attack that market very efficiently.
Right.
They just don't have that weight, that drag from the old systems.
Yep.
Big advantage.
So this innovation gap is definitely emerging. Is it just a gap, though, or different strategies? Does the white paper give a sense of the sort of long-term consequences of these different paths?
Yeah, it really does. The white paper flags this as a major dynamic. Absolutely. It even highlights specific success stories that kind of illustrate these different ways of working, which we should definitely talk about. And it also gets into the talent side. You have great places like Georgia Tech turning out AI and ML experts, but there's still this significant knowledge gap. Finding people who truly get both the finance side and the practical AI implementation, that's the tricky part. You need both to really make it work effectively.
Okay, this is where I think it gets really interesting. The concrete examples. AI actually moving the needle. Tell us about that Nigerian neobank case study mentioned in the paper. That sounds like a huge leap in speed.
Oh, this was a definite standout from the roundtable discussions, yeah. So this neobank project in Nigeria, they needed a super fast assessment of their existing code's architecture. Now, normally that's weeks of work, right? High-level architects manually digging through code. Instead, they used AI, specifically large language models like Claude and Gemini.
And how fast are we talking?
Yeah.
Weeks down to, that just sounds incredible.
Yeah. It was stunningly fast. The AI analyzed, and I quote, all the code bases in about 45 minutes to an hour. Identified major gaps, security, scalability, the critical stuff.
Wow.
But they didn't stop there. Then they used AI to actually generate the infrastructure as code using Terraform, for automating the cloud setup. It produced the detailed JRA user stories for the developers and even created sophisticated UI/UX designs using tools like Figma.
The whole development process then.
Pretty much. What usually takes months, multiple teams, painstaking effort, they got it done in roughly 2 weeks. High confidence designs basically ready for production. It shows the sheer acceleration potential.
That's an unbelievable speed up in the development cycle. Mind-blowing. Okay, what about Climate First Bank? The paper calls them the fastest growing community bank in the U.S. How do they use AI? Especially since, community banks aren't exactly known for jumping on new tech first.
Right, Climate First, they're based in Florida. Their approach was very strategic, very incremental. Instead of some huge disruptive project, they actually acquired a small company that were doing agentic frameworks.
Agentic frameworks, what does that mean exactly?
Think of them as AI systems that can plan and execute complex tasks more autonomously. They break down big goals into smaller steps, going beyond just simple automation. So Climate First used this tech to systematically automate their internal processes, but crucially, one by one. This step-by-step method let them build momentum, show value internally, and manage the risk carefully. Which, as you said, is a pretty stark contrast to how many community banks often react to new tech. It shows smaller players can do this effectively.
Okay, but it can't all be smooth sailing and super fast deployments, can it?
Uh,
The white paper does share some cautionary tales. What goes wrong when AI is used without that critical human check?
Exactly, and this came up quite a bit at the roundtable, instances where developers may be a bit too eager or, frankly, not fully understanding the tool, just blindly implemented AI-generated code, and it led to, well, serious problems. One participant shared this anecdote, described as hilarious, though I imagine not for the people involved. Quote, when the 5 coders delete their whole database and their whole production database, apparently it was all over Reddit. A very real, very painful aha moment about needing human oversight.
Yikes. Okay, delete the whole production database. That's more than an aha moment. That's a catastrophe. It really drives home that old garbage in, garbage out idea, but maybe with AI, it's garbage oversight, total disaster.
Yeah.
So what's the bigger lesson here? What mindset shift is needed?
It absolutely hammers home that quote from the white paper. The quality of code that the LLM spits out is a reflection of the quality of the mind that created. It's not about replacing judgment, it's about enhancing it. The mindset shift is crucial. AI is an incredibly powerful tool, yes, but it needs intelligent direction, not just blind trust. And the paper also mentioned issues with AI-generated marketing content. Stuff put out without proper checks, led to fabricated references, completely inaccurate claims. As another participant really stressed, and this is so important, people think LLMs think. They don't. There's no thought process. The LLM is not thinking. It is reporting the data that you are asking it to report back. Human review, human validation, it's just non-negotiable for anything critical, especially in finance.
Okay, so given all that complexity, the potential pitfalls alongside the huge potential, how should institutions approach this responsibly? The white paper lays out this AI readiness assessment framework. Sounds pretty vital. Can you walk us through the key parts of that?
Yeah, this framework is really essential. It's for any institution wanting to do a proper self-check before making big AI bets. It looks at 5 main areas. First, technical infrastructure readiness. Do you have the data access, the compute power, the cloud setup needed? Second, data quality and governance. This is huge. Focusing on things like training data. Where does it come from? How do we know? Has it changed? Really digging into the data's integrity. Third, regulatory compliance readiness. Tackling those thorny questions like who is accountable if AI gets it wrong?
Yeah, that's a big one.
Huge. Fourth is organizational culture and skills. Looking at resistance, especially in corporations that are stuck in those legacy contracts, and crucially, the skills gaps. Upskilling is key. And finally, number 5, use case clarity and prioritization, making sure you're using AI to solve actual business problems, not just doing AI for the sake of AI, aligning it with strategy.
And speaking of regulatory compliance, that whole landscape just seems to be constantly shifting, doesn't it? What are the main regulatory signals the white paper highlights that financial institutions really need to have on their radar right now?
It's definitely a moving target, and that raises big questions for everyone in finance. The white paper points out several key things. First, there was that significant 2023 joint guidance from the FDIC, OCC, and the Fed about third-party relationships. Basically, it puts the responsibility squarely on banks for what their vendors do, including AI vendors. You can't just outsource the risk.
Okay, so vendor management becomes even more critical.
Absolutely. Then you have the CFPB, the Consumer Financial Protection Bureau. They're really zoning in on AI transparency, especially around things like credit decisions and how consumer data consent is handled. And this is where you see a difference with Europe. One participant noted that in Europe, it's possible for me to give you permission to do a one-time bank pool, Castanigo. Whereas in the US, platforms like Plaid often get broader sort of ongoing permissions. That's getting scrutiny.
Right.
And Europe's regulations like DORA, the Digital Operational Resilience Act, and obviously GDPR, they're having ripple effects globally too, aren't they?
Exactly. DORA is all about operational resilience across the entire financial entity. It forces banks to really understand and report on risks throughout their whole financial supply chain, which definitely includes AI providers. And GDPR, well, that emphasizes explicit consent for data use and, importantly, the right to explanation for automated decisions made by AI. The big challenge, though, as the white paper bluntly states, there's no guidance on that yet. So until the guidance comes, it's going to be make it up as you go.
Make it up as you go. That sounds risky for a bank.
It is. It creates uncertainty, but it also underlines why having strong internal governance and, frankly, a solid ethical framework around AI is so vital right now. You have to anticipate.
So given all this, the tech challenges, the human element, the regulations, what do realistic timelines for implementing AI actually look like? Do the paths for, say, a big traditional bank versus a fintech startup really look that different, according to the paper?
Oh, absolutely. The white paper draws a very clear distinction. Your traditional institutions, they're facing longer timelines due to legacy system integration challenges. No surprise there. Their roadmaps usually involve distinct phases: building the foundation, running pilots, then scaling up. That whole process, easily over a year, often longer. Fintech startups, though, they benefit hugely from that AI native design right from the start. They can do rapid prototype development and often get market-ready products out the door in, say, 6 to 9 months. It comes back to that point someone made. The cost to launch something has gotten so low, it enables that speed. It really is a tale of two speeds.
And underlying everything, both the successes and the challenges, is data. Always data. The white paper brings up something really fascinating here. Self-sovereign data. That sounds potentially revolutionary for trust.
Data is absolutely fundamental. Quality, privacy, security, they're paramount in finance. The challenges are significant. Financial data is often stuck in silos, inconsistent, and you have data drift, where the data changes over time, messing up your AI models. The roundtable even brought up data poisoning, the risk if you're sourcing your training data off the internet. Malicious data corrupting your models.
Scary stuff.
Definitely. And that's where ideas like self-sovereign data come in. The concept is that every data has a firewall around the individual that's configured for that data. It gives the data itself tamper-evident qualities and full auditability. You can track exactly who did what to my data, all in audit logs.
So it's like building the trust and control mechanisms into the data itself, not just relying on outside security or policies. It feels like a really fundamental shift.
It absolutely is. It's about empowering the data owner. The paper also touches on other strategies, of course. Things like generating synthetic data, artificial data that mimics real patterns but protects privacy. Federated learning is another interesting one, training models across different data sources without moving the raw, sensitive data itself. Plus, data minimization, only collecting what you truly need, and just robust, comprehensive data governance. But it all loops back to that core principle we mentioned earlier from the paper. The quality of code that the LLM spits out is a reflection of the quality of the mind that created. And you can say the exact same thing about the data feeding these systems. High quality, trustworthy data, that's the absolute bedrock for any effective AI.
Wow, what a deep dive this has been. Really covered a lot of ground. We've definitely seen AI is already delivering real, tangible value. Things like code analysis, that rapid architecture design, fraud detection, sophisticated credit underwriting. It's happening now. But it's also come through loud and clear that human judgment, that critical thinking, that disciplined approach to implementation, they were just absolutely essential, non-negotiable.
Totally agree. And while those fintech startups are moving at frankly incredible speeds with their AI native models, the traditional institutions, they face very real, very significant hurdles. Navigating those legacy systems, dealing with this complex, shifting regulatory environment, it's tough. And data quality, solid governance, especially with innovations like self-sovereign data maybe coming down the line, that's going to be completely foundational for adopting AI responsibly and actually getting the benefits.
So as you, our listener, continue to navigate this future of AI in financial services, maybe remember this takeaway. The real difference between the leaders and the laggards, it increasingly won't be about who adopts AI first. It'll be about who implements it most thoughtfully, most strategically, and with a really clear-eyed understanding of all the practical implications. Which leaves us with a final thought for you to ponder. How will you balance that irresistible addiction to pace, that incredible speed AI offers, with the crucial, necessary time for thoughtfulness and critical human oversight in your own drive for innovation?